We're at the New York Stock Exchange, the center of American capitalism, and we've got a very special tour guide in Jonathan Corpina. And Jonathan, thank you so much for agreeing to do this with us.
Thanks for having me.
Jonathan, what do you think are some of the big mistakes that individual investors make? You're a guy, you've been here, you're steeped in it. What are the same dumb mistakes they make over and over again?
I think one of the major mistakes that investors make is getting involved in something that they don't know fully about. So we can kind of take that to a whole nother level when you talk about the mortgage crisis. You have a lot of people who got involved into something, signed their name on the dotted line, thought they were buying something, didn't want to read the fine print, and then a couple months later, a couple years later, realized it was a completely different product. I think as our market structure has changed and has gotten much more complex, there's a lot of exotic products that are out there that people thought that they knew a lot about and could get into and get rich quickly. In fact, that's not the truth. And you can take it to a smaller scale. When you want to invest in a company, let's say you want to invest in a shoe company, make sure you know enough about that company. Make sure you understand that product, what they do, how they do it. Is it a product you use? If you like that product, well, that's a start. If you've got negative feelings about that product or you don't like the way it works, right there, that could start telling you something. So I think education is extremely important when investing in our markets.
Give me 3 easy things I can synthesize and say, this guy is an expert.
Risk parameters. I think that's very important. So when you
know
buy,
what you can stand.
Know what you can stand. When you buy a stock, if it goes down, know how far you're willing to take that pain. Number 2 is instituting stop orders and being very disciplined. So if you buy a stock and you say, in my mind, it's going to go down 5%, put that stop limit order in, so as soon as it triggers it, it's out of your hands, it automatically locks you in. You have to be very disciplined. And the third point would be getting back to know what you're getting into, believe in the product that you're investing in, because if you believe in it, whether it's apparel, whether it's cat food, whether it's a movie company, if you believe in it, that eventually will give you the confidence to continue to hold on to that investment. If you don't believe in that product, you're going to get out of it very quickly, and that might not be the right decision.